Welcome to another episode of Molo Consulting. It's been a while I've shot a video. Now, what I want to talk about in this episode, it's basically what a lot of people ask me a lot about with regarding to looking for finance or a loan for their business. Now, there are a few factors I want us to look at that are very critical when you want to loan an amount from the bank or for whoever funder it is. Now, to start with, obviously, whoever will lend you will want to ensure that the loan would be paid back. Now, let's look at the few things that would be critical. First one, capital. Now, capital is the money you personally invest in a business. It indicates how much you stand to lose if the business fails. Lenders will expect you to contribute your own asset and to undertake a personal financial risk to establish a business before asking them to lend you money. After all, if you have significant personal investment in the business, you are more likely to do everything in your power to make the business successful. So you shouldn't be shocked when they request that, which actually go to the second factor, collateral. Now, giving a lender collateral means that you pledge an asset you own, such as your home, to the lender, with the agreement that it will be the repayment source in case you can't repay the loan. Both business and personal asset can be source of security for a loan. Now, it's not, people sometimes think, it should only be business assets or anything. Even your personal loan, they may require a collateral. Now, another one is a guarantee. A guarantee is when someone else signs a document guarantee to repay the loan if you can't. Some lenders may require a guarantee in addition to a collateral for a loan. Now, the third one, capacity. Now, your capacity to repay the loan is the most critical of the factors. The protesting lender will want to know exactly how you intend to repay the loan. The lender will also consider the projected cash flows within your business, the timing of the repayment, and the probability of a successful repayment. They will also want to know about your contingent sources of repayment. For example, do you have savings, a house you could sell, credit history? It's considered an indicator for future payment performances. Check your personal credit situation. Too often, entrepreneurs think that their business credit and personal credit are separate. Like I said before, they may consider both. Not so. Your business credit is built upon your personal credit when it comes to to funding. Now, another factor, the conditions. Now, the condition basically focus on the intended purpose of the loan. Will the money be used for a startup? Working capital, basically the running of the business. That's the working capital. Equipment, is it in inventory for the business or what? Inventory, basically stock. The lender will also consider the economic climate and the condition within your industry or in other industries that could affect your business. So basically, they will look at everything 360 degrees of what's happening. Lastly, you yourself, the entrepreneur, or should we say your character, in the personal impression you make, the lender decide whether you are sufficiently trustworthy to repay the loan or generate a return on fund invested in your company. Your education or your experience in both the business, your industry will be reviewed, or maybe even collective as all the partners with experience, because all those things will be able to give them an idea if you guys are worthy to be able to be given the finance. Thank you so much. Should you have any queries or questions, please feel free to highlight it on the comment. Visit our Molo Consulting TV for more episode. Thank you.